Right, the reason I just wanted to hop back over here was because I pulled up the Euro Aussie very quickly earlier on, and I mentioned earlier about this rotation where as we you had a nice move in one session with a pair, and then you move into another session, and you think the reversal is coming after that nice move, and in fact nothing seems to be happening. And the other reason for moving over to look at the NinjaTrader version of the CSI is with NinjaTrader, the timestamp at the bottom is so much easier to read on MT45. I think we're going to have to come up with some kind of indicator, because it's just a pain. As you know, with MT4 and 5, the timestamp on the chart will either be your broker, given by the broker, or by MetaQuotes, and you have to either take off 2 hours, add on 2 hours. It's a real pain. Anyway, NinjaTrader, you are in real time, as it were. And I just want to highlight, this was the release of the news, I think it was about 2:30 our time, to do with the Chinese CPI. And we can see the blue line here, which is the Aussie. That had been rising sort of quite nicely. It then actually started to roll over just before the news, and then it had an acceleration after the release. But I just want to have a look at this is the euro, and we can see here that was falling, and then you had this divergence, and this divergence is what we saw on the charts that I was showing you. So let me just take that down a second. So that's what we were looking at. Let's pull that away. Euro Aussie, here we are. Let's try and find that particular move coming into the release, off the release itself, which caused the volatility that we can see here, even on the 10-minute chart. This is and as I said, it's so much easier with Ninja because you can see the timestamp at the bottom. This was as always, with fundamental news, you'll often find maybe there's been some leak of the news, which is why the market will suddenly start moving. And we can see here there was quite a dramatic move high, and it was all on volatility. There was volatility candle. You had 1, 2. That wasn't a volatility. That was the volatility there. A lot of volume underneath it. With volatility, to see such a sequence of candles, it is possible. It's not. No, but it's not the norm. You tend to have either 1 and then 2. What always happens with volatility, as we can see here, you have the volatility. This indicator triggers in real time. When the next candle forms, as you can see here, it goes back to within the spread of the candle. And as David said, if you're in a trade, then oftentimes it's easy to say, that's it, I'm out. Now what happens is, it back into the spread of the candle, or then it carried on higher. Same thing happened. This candle back into the spread of the candle again. Then it carried on. Then it hit the volume point of control, which is a strong area of resistance. Then we had the final volatility candle again. Volatility triggered, and again within the spread. But by this time, the move had come to a point of exhaustion. There is a strong level of volume-based resistance up here. We talk about support and resistance. We have price-based support and resistance, which are these indicators here. Here we have volume-based support and resistance. And in fact, that final after that final candle, the retreat to within the spread of the candle, then that kind of it was coming to an end, and then we went into a period, quite a long period, of sideways congestion before we had this reversal here. Well, here we have all the candles. We have quite a lot of volume for Asia, as we can see under here. There's no firm direction, so we are waiting for the reversal. Now, how do we know at what point, in terms of how can we validate that support and resistance? We can see that support and resistance in terms of volume resistance or price-based resistance, and this is where, personally, and I encourage those of you who are in the program and who have the full package indicators, to look at the Camarilla indicator. And this is where I have it here on the chart, and this is replicating that piece of price action just with the candles, with the volatility indicator, the volume indicator, and the Camarilla. Why did, when the price arrived at where it did, where it had the volume resistance, why did it suddenly appear to stop dead? And one of the reasons is because it hit this R4. On the Camarilla protocol, most traders use Camarilla and they use 4 levels, and the 4th level has always been one which is considered that if there's a breakthrough, it is a valid break through it, and so the price will run. Doesn't always happen. You do need volume to help you validate that as well, but it's just one more piece, as I say, piece of the jigsaw to tell us why we have this sort of stop at this level. It hit the R4, it never really managed to get through. It carried on, and then it reversed lower. And in fact, this reversal lower on the Euro Aussie was also captured on the faster time frames of the CSI. I can't pull it up now because the indicator hasn't got enough of a look back period to highlight that, and it would also have been on the matrix. So that is another reason why that this pair actually stopped where it is. We had, from the volatility perspective, we know we would expect a reversal after such a strong move, after the momentum, but this is actually, this is like a dead stop because this is such an important level. I have to say, some traders use Fibonacci. That's why they use these methods, if you like, of trying to give the support and resistance a degree of hierarchy. R4, S4 are important. We've gone one step further and added 2 more levels to the Camarilla. There's the R5 and the R6, and they really do help in helping us to establish whether the reversal we're seeing at the moment is, as I said, is going to be likely valid or not. But as always, we need to see that in multiple time frames. So if we move over to the hourly chart, what happened here? Well, it did actually get to not such a hugely important level, which is actually the R1, R2, which is the R3. So that also stopped at a significant level on and in fact, the most important element of this chart is on the hourly chart. When we talk about using maybe the slower time frames where you don't want to sit through the noise, if you like, that you get on a slower time frame chart, at what point we saw all the price going through the volatility candles on the 10-minute chart. When we came to the hourly chart, now this indicator triggers in real time, so at some point in the formation of that candle, the volatility trigger, these 2 arrows, these 2 triangles would have been triggered. So we know we have a volatility candle on the slower time frame. It did actually, and what I'm trying to say is, because it triggered in the slower time frame, it gives even more validity to the fact that at some point this move is going to come to a stop. On the 10-minute chart, it stopped at the R4, and then it actually hit another level on the 60-minute. Not such a key level, if you like, but it's still a level. So you had volatility, you had important levels, you had the momentum draining out of the move. Then you had the potential for the reversal setup, if you like, in this particular pair. I just want to bring up the 60-minute chart so we have a look and see what we're looking there up there as well. Let's have a look. Where are we? Yes, here we are. We actually hit, as I said, we've got this level here. Let me just put some more data on here. More days. Let's put 30 days instead of 10. Just fills out the gap over there. Let's have a look and see where we are. Well, we were looking at a volume resistance up here as well. This is the candle, but because it coincided with what we saw in the 10-minute with volatility, the levels that we saw in the multiple time frames plus the other indicators, would that have been a potential reversal? Yes, why not? But but with after volatility, you also have to expect, as David said, with reversals, they're not V-shaped. They don't go from primary to back to primary. You do get a period of congestion. So, you know, do you enter at that point? Where do you enter? That's very much a very, there's no clear-cut answer to that. We're not going to do it this time. Next time we're going to look at reversals using non-time-based charts, because otherwise it would be too much to cover. What I wanted to cover is, if you like, the concepts and the principles behind reversals. But next time we will look at perhaps using, well, not perhaps, we will be using non-time-based charts to help us with our entries and obviously with our exits. Now, with this particular move at the moment, that would have been the reversal. And this is over, you know, this is 2 hours here. This is a long, you know, this is a long time for certainly a short-term trader, but it did actually carry through. And where did it go? It actually stopped at the volume point of control on the 60-minute. Let's have a look at where are we in terms of levels here. It was kind of trading around the R2. The next significant level for this is down at the R1, which is where the start of this is the move at just over 66.45. If we look at the 10-minute, let's see what that's telling us. And by the way, these levels that we have, they are recalculated. The levels up to and not including the hour are recalculated on a daily, on a 24-hour basis. But the slower time frames, they stay there for the whole of this week, which is why you will get different levels in different time frames. That's it. That's what I'm going to say on that. Can I move back to you now? Is that okay? And